really interesting. Masato Kanda is staying on for another year as a currency chief. And he was behind that $65 billion intervention last year, right? When the yen was getting, what, close to 146. Is that sort of the line in the sand?
Well, Japanese officials are very reluctant to talk about lines in the sand. They like to talk about excessive moves, one-sided moves, speculative moves. However, if you listen to analysts, we've got 145 mentioned as a possible threshold. I think most people, though, are looking at 150 as a moment where Japanese officials could get very uncomfortable. If you look at the levels last year, we were approaching 146 when we had the intervention in September, and we were approaching 152 when we had the intervention in October. But I think you should look out for two things before you really worry about intervention. One, I think we need just one grade up on the language from officials like Kanda. We need something like, prepared to take bold action or decisive action or deeply concerned about speculative moves. Need that kind of level of verbal warning. Plus, you need some more movement, more volatility in the market. So a move of more than 2 yen of the dollar yen within 24 hours to show that you've got an excessive or speculative move. Because the officials need that to be able to back up and justify stepping into markets.
How does the mood in Japan over the weekend yen this year compare to what we saw last year?
Well, I think last year we had this kind of sense of panic and impending doom. Would the bottom fall out of the yen totally? Would we go down to like levels of 160 or even lower? I think this year there's less a sense of that panic. It's not exactly a comfort zone, but there is a little less fear and concern about these levels. The weak yen obviously helps Japan's global firms. We're seeing Japan stocks close to 33-year highs. So obviously investors are seeing something positive there. Also, we've got a different factor this year that we didn't have last year, is that because we've got all those pandemic restrictions lifted now, we've got tourists back in Japan. So we've got this huge surge of inbound traffic, which is also helping the economy. So all those segments of the economy that weren't benefiting from the weak yen last year in the hospitality sector, in the regions, now they are seeing some help from that weaker yen. And we saw that in the GDP figures in the first quarter with a 1.1% gain in annualized terms just from inbound tourism. Also, I think another factor to consider is we're getting closer to the end of the rate hiking cycle globally. So I think people are feeling more comfortable that, yes, the yen could get weaker, but it's not going to go spiral out of control like the fears were last year.